Well, you've heard this morning the views of experts. We've heard that the world looks pretty good from the mouth of an economic advisor to Her Majesty's government in the UK. And we've just heard that things are looking pretty good from foremost experts in travel and tourism. So we're going to now find out what it's really looking like in the eyes of four of the leading CEOs in the hotel industry. First of all, Jim Abrahamson, who is CEO of Interstate Hotels and Resorts. Jim, welcome on stage, and take a seat and feel comfortable. Jim runs a hotel management business which describes itself as a large company resource with a small company focus. It's 340 hotels, 70,000 rooms across North America, UK, Europe, China, and India. 85% are third-party arrangements with major brands. Jim joined Interstate from IHG, having had senior positions with Hyatt and Hilton. He chairs the US Travel Association. You just heard how well they're doing with President Obama, who seems to be now as concerned about increasing inbound tourism as he is about not going over the fiscal cliff. Jim was awarded the Hospitality Executive of the Year at November's New York Hotel Show, and he must know a thing or two about conducting business in harmony, as he's also chairman of the Atlanta Symphony Orchestra, and we'll ask you to do a renditioning a bit later. Next, we have Sébastien Bassin, who is chairman and CEO of Accor. Sébastien, welcome.
Thank you.
Good to see you. That's it. Good. Sébastien, having declared that the group had lost some of its innovation and ability to adapt to change, has set about reorganizing the company since his appointment last August by splitting it into two, one that owns and invests and one that operates and franchises. That sounds quite familiar to many of us. And after returning from a tour of his properties only recently, he's got 3,770 of them in 92 countries, from economy to luxury. He said there are simply too many chefs in the kitchen at Accor, which isn't surprising with so many hotels. He went on to say, we must restore empowerment to those on the ground, change our mindset and our organization. So some rare, honest, hard talking from a new hotel CEO. Our next panelist is making his debut here at IHIF. Henri Giscard d'Estaing is chairman and CEO of Club Méditerranée. Henri, welcome.
Thank you.
Club Méditerranée, of course, is the pioneer of all-inclusive holidays, now operates 80 exclusive resorts in 25 countries. Under Henri's leadership and skills, which have been honed in the consumer foods industry, Club Med has undergone an upscale transition and international expansion to attract a base of premium family customers. The group having refocused its business on its 4- and 5-star Trident resorts, 5T luxury spaces and luxury villas and apartments, and an ambitious development program for China. This has obviously caught the eye of some eager predators who have tabled a £557 million bid for the company, which is due to be decided by a Paris court anytime now. Henri tells me certainly within the next 4 weeks. So if Henri leaves the panel in a hurry, you'll know he's now under Chinese control. And finally, we have Michael Glennie, President and COO of FRHI Hotels and Resorts. Michael, welcome. There we are. Good. FRI is the parent company of the leading luxury brands Fairmont, Raffles, and Swiss Hotels. Currently 105 hotels, but a target to increase by 50% over the next 5 years, with new openings in Russia, Turkey, Saudi Arabia, and the United Arab Emirates, and Indonesia. And he's just appointed 5 new senior executives to oversee his growing portfolio of hotels in Asia-Pacific region. So sorry if you've come here expecting to get a job. They've already just gone. Michael's had a job or two running and developing quality, iconic hotels, including the New York Waldorf Astoria and the Boca-Raton Resort. He joined FRHI in 2005 in charge of real estate, and hopefully his appearance on the panel today will emulate his Fairmont mission statement and turn all of these moments into memories for all of us. There we are. Right, so I'm going to give the panel some questions. They're going to give me some honest answers. As you know, CEOs are always honest in their responses. We're going to find out what's really going on in the world of international hotel keeping. So first of all, I'm going to ask just for a quick snapshot of current trading, business environment, and the outlook for the rest of 2014. We've heard from the experts that it's looking pretty promising. So Jim, how's rate and occupancy presently?
Well, we've come off a strong 2013, where we saw our growth. About 3/4 of our hotels are in North America and a quarter outside. But in North America, strong year. We had an 8% RevPAR increase, about an even split of rate and occupancy, so strong year in the United States. Outside of the U.S., we're very strong in the U.K. We've got about 83 hotels across Europe, so about 50 of them are in the U.K. The rest are scattered across Europe, and we have 13 hotels in Russia. So it's been a mixed bag across the European portfolio.
Any weak areas that you're concerned about?
No, we saw really a strong UK business, and a lot of our hotels are provincial. So everyone talks about London, and the London results skew UK results very much. But we've seen the recovery go well into the provincial market too, and our entire estate in the UK has done extremely well. So we're real pleased about where it is. 2014, we're probably seeing for our company globally about 6% of RevPAR increases.
Okay, well that matches with Sebastian. Sebastian, 6% increase in operating profit you've just reported, and good progress towards your 100 million euro of saving. You have 35 million, I think, already reported. Strong revenue growth in the fourth quarter of 4%. What's it like now then?
It's pretty good. I mean, I have to say, last year has nothing to do with me. So I have to thank the team, my predecessors. They've done a good job. Now, the first semester last year was very mediocre. The second semester was much better. And next 12 months, actually looking rather good. I guess we are in 93 countries, so it's very good in Northern Europe. It's still weak in France, as we all know. Clearly rebounding in Southern Europe. Very strong in the Middle East, where we have a great presence. Strong in Asia Pacific, concerned about China. Very strong in Latin America. So all in all, I think we're going to get our act together. Profit's going to get better. And cost cutting is one tiny element of what's needed. I left the finance industry to join a true industry. So finance is part of it, but this is not the main part of it. So I'm back in people, project, embarking everyone.
All right, that's good. Henri, your results last year were described as sun, sea, and stagnation. 9 million euros of loss, and a French market and Egypt and Tunisia very challenging. So how are forward bookings looking for this summer? And any of those markets like France, Tunisia, and Egypt turning around?
Well, first, if we look at last year, the last S is usually different in the definition we have. I would have preferred a more sexy growth. That's fair to say. We have presently growing sales and bookings with, as it has been said, a very contrasted situation. Very strong growth in Asia, including China, because we are, as being only in holidays, disconnected with the economy, or at least partially, and the willingness of Chinese to get holidays is growing at an extraordinary speed. Very good growth in North and Latin America, and obviously a much more difficult situation in Europe, and especially in France, which is still our main market, where the touristic market, French having holidays, is declining for the three years now in a row. Good thing is that we are doing significantly better than the market, because I believe that the repositioning we've made position us in the right segment, but it is not sufficient to do better than the market. You need also a market with a minimum of dynamic. Then if we look at next summer, we see also growing bookings, even though, as you said, there are still some instability in the world, including in some of our destinations, which doesn't ease the process. Yeah. But the whole point is to compensate that by others. And to conclude on that, what is interesting is to see that we are now able to attract customers from either America or Asia to Europe, and including France for our ski resorts. We are very big in ski. We have received last January 3,000 Brazilians, families, who went to ski in France. So that compensates for a part of it.
Okay, that's good. And finally, Michael, how's it looking? I mean, Asia, of course, is a big play for you. So your results are buoyed by the Asian markets?
Well, Asia's been very strong, Michael, and I would say probably Asia and the U.S. The U.S. has had a terrific rebound. So those two would probably be our strongest. Europe has been somewhat slow. Middle East, depending, specifically which country you talk about, we've got quite a high concentration in the UAE, which is doing extremely well. And then China, which I'm sure we're going to talk a lot about, a bit of a mixed bag, obviously, because of the oversupply in a lot of segments there.
Okay. Well, let's just focus on what's hot and what's not. You've already given us some hints, markets, geographies, brands, segments. Sebastian, start with you. Quite a concentration on IBIS in Europe, 100th property opening here in Berlin, in fact, and another 400 IBISes on the way. Is this where a big focus for Accor?
Yeah, Berlin is hot. I guess
I've been outside today. It's warming.
We should go to the zoo together afterwards. Not Berlin. Sorry, IBIS is a locomotive. It's 40% of the network. We have 1,750 IBISes in the world, and we're opening one IBIS every 3 days in the world. So, and it is more than 50% of the profit of the group.
What sort of development team do you have for one every 3 days? I mean, how many?
Accor is opening one hotel every other day,
right?
And of which IBIS is one every 3 days. So it's a big machine. It's a great group. So everything is hot at Accor, which is why I came. IBIS is a great brand. Novotel, Mercure are very good, solid, recognizable mid-scale brand. Upscale luxury, Sofitel has done tremendous work over the last 7 years. M Gallery is a nice collection. Pullman is growing very fast on flagship capital cities. So clearly my job is not to recreate brands. My job is to basically define a vision, one direction, and make things easier for the team and easier for all of you in the room, clients, partners, investors, to understand what Accor is all about. I think we have a misperception. Accor is far stronger, far better than people actually understand it. Okay. So I'm going to be, obviously...
That should have added about 10 francs to the stock price, I think, or 10 euros.
I'm very proud of this group. I've known him as an investor and a board member for 9 years. Now I have my hands dirty into it. Right. Let's defend it.
Okay. Now, Jim, your job isn't to make people understand the brands. Your job is to make them operate effectively. And the US is still a core market for Interstate, yeah?
Yeah, we're growing faster in Europe, though, than we are in the US. In fact, we're growing very quickly with all of our brands. We manage over 40 brands today. In fact, IBIS is one of our fastest growing. A year ago, we had 0. Today, we have 12. Right. So it is a fast-growing brand. So out of all the brands, when you look at it, we're the largest Marriott, largest Hilton, largest IHG, Starwood, and Hyatt. And with all of that, we see the hottest markets being in this branded boutique, in select service, in urban, near urban markets. That's where the growth really is right now in business-oriented hotels. When you talk about business or trends and growth of travel right now, it's really concentrated in transient leisure. We're just not seeing the formation around the group business. So I think it's going to be exceedingly tough in group hotels and group destinations. But this branded boutique segment, the boutique lifestyle hotels, very powerful growth engine for us right now.
And which of those brands is performing best?
Well, which brand is performing best? That's a good question, other than IBIS. IBIS Styles.
Other than IBIS.
IBIS Styles is absolutely right.
I shouldn't have seated both of you close together, I don't think, yeah.
The brands that are really performing the best right now are those that are in newer markets right now. And I think we still are seeing, although we're in an economic recovery cycle, I think the hotel economics are still a little bit challenged right now. The capital requirements, the brands are requiring a lot of new investment. Okay. So this business is all still about new. What's new? Okay. New sells, old smells, and the customer wants something bright, fresh, and new. So it's whenever you can bring a new product to market, you're congratulated for it.
Okay. Well, something that's not so new, because some of the brands that Michael runs have been with us for a long, long time, but they're just on the outset of really rolling out, I hope. Michael, tell us more about your particular portfolio and what you have planned for it.
Yeah, it's actually a very exciting time for us because, as you point out, we've got in at least two of our brands, we've got hotels that go back to the late 1800s, some really iconic hotels. But if you take Raffles, Fairmont, and Swissôtel, between the three, we've got about 110 hotels now. But we've got a very strong pipeline. We're going to see 50% growth across the portfolio in the next 4 or 5 years, which is obviously tremendous growth. We're still small compared to some of the big players, but we find this tremendous demand for these brands because I think they are singular and iconic.
Yeah. And Henri, just talk us through the French market's prospects, because I mean, we've got two Frenchmen for the first time on our panel here, so obviously France is making a comeback, but is it making a comeback economically, I mean, from a hotel perspective?
I think you should have to look at it two ways. France is and remains the largest touristic destination in the world in number of visitors, and obviously has many advantages in that respect. And with companies like Accor and us for our little segment of holidays, we are still confident on the destination, and we are, for instance, creating a new ski resort in Val Thorens, which is the Three Valleys, which will be an extraordinary thing, and we are again confident because of the international attraction. For the French market, it depends then on the French economy, which is still obviously going through slow improvements.
Right. Is that how Accor sees it? Slow improvements in France?
It's a good understatement. It's we're getting better. No, seriously, I guess you've seen the numbers. We're lagging everyone.
Yeah.
So we get to.
Is your government
direction?
Is your government
That's right.
Is your government policy helping matters? Or?
Joker. It's enough actually with Accor.
Right. Okay. Henri, just staying with you, 2/3 of your operating profit are coming from China, from just over 1/10 of your group revenue. Isn't this is an interesting balance? Huh?
In fact, it's coming from Asia.
Asia,
and a significant part of it from China. We had last year more than 100,000 guests from China. The interesting thing is that their ADR is about 20% above the ADR of the Europeans or of our American customers, which means that we are able to attract high-end Chinese customers who are ready to pay a good price. Yeah. Second element, which is very interesting, is that they are now going further away than only Southeast Asia. We started to develop the Chinese market for Mauritius. I pushed Air Mauritius and the Mauritius government to put planes from Beijing and Shanghai, and we see an incredible development, and we will progressively open new destinations.
Yeah. And the all-inclusive pricing is a formula that they prefer?
Yes, for very simple reasons. They are starting to have holidays. Until 10 years, they were just traveling. First, they had not the right to travel individually. It is only in 2003 that the Chinese government authorized Chinese citizens to travel individually. Before, it was in groups with a little flag. Second, as they discover new destinations, new countries, new habits, the fact of being helped, that means in their language, finding appropriate food, having activities. They are very active, the Chinese. They want to experience, because for some reasons they have not experienced much in some years from now. Right. So this formula works very well, and it's not a surprise for us. We have been in Asia for 30 years. We've been very successful in Taiwan, Singapore, Hong Kong, and now it's China.
Okay. Michael, you're not going to go all-inclusive, though, are you, in pricing terms?
No, I don't think so. We like the a la carte pricing.
A la carte pricing, right, okay. All-inclusive pricing is held by some to hold back revenue performance.
Alors, you were, the previous question, what's down? What's down is middle. So in the all-inclusive business, what has been average, it doesn't work. Doesn't work. If you are ready to offer something which is unique and exceptional, it works, and you are able to generate significant growth in your ADR.
Right.
And probably what is the most impressive nowadays is this move. Again, I'm speaking only about holiday resorts. This move towards premium all-inclusive.
Sebastian, new structures, right,
Yeah.
for 2014. How do you see this impacting on performance? Obviously, it's going to improve performance from your perspective, but how quickly are the new structures now in place and working effectively?
Well, January the 4th, which was like a month and a half ago. You know, the two structures, it's just common sense. That group, a bit without knowing, for the last 40 years, have been conducting two businesses, which requires different metrics and different mission, different objectives, and different skill sets. You can be an operator and a damn good operator, which is service of your clients, service of your partners, top-line minded, fee-oriented, and then you have to invest on distribution, CRM, loyalty, and segmented brand strategy. So that's really the business of a true hotelier. But there's another side of the business which has nothing to do with the first side, which is what is the cost of a dollar? What is the risk you're taking by investing that dollar? And if you're able to measure the risk, then what is the appropriate return you want to basically pay off that risk? That business has been done it's actually part of the DNA of Accor. Accor started as a developer, investor, constructor. Now, in the last 10 years, we just have to realize that I guess it has to be conducted differently, with different missions. So I just started by saying to the guys, okay, I'll make it simple on you. Those who basically have the skill sets and the experience should be going and focusing on hotel services, which is, again, the operator. The other guys, come with me. I will help you, since I've been doing it for the last 20 years, on really getting the right methodology, which is discipline, rigor, measurement, again, cost allocation. And we're going to do it very efficiently. And at the end of the day, which is why we changed the strategy, why not doing it ourselves? Why should we give that opportunity to somebody else's? I don't know whether I'm going to be convincing the market. What I know, the market is being listening and basically giving me a free ride for the time being on really getting that in motion. So it's going to take me 2 years, 3 years to get it done. 3 years from today, I will basically know where we stand. There is one must, which is an enormous must if you go that way. You have to be transparent. So from the first day of January, every single reporting numbers of Accor being given to the outside people and internally will be reported differently in a fully transparent manner. Hotel services, profit and loss, balance sheet numbers is going to be given, comparable apple to apple with Choice, Marriott, Intercontinental of the world. And guess what? We're pretty good. We're actually better than many others in terms of performances. Nothing to hide, nothing to be ashamed. To the contrary, I think we're top of the class. Hotel Invest also gives the numbers, and you know what? We're pretty bad, which I knew. So let's fix it. Let's basically get a proper yield on the 1,400 subsidiaries we own. Let's get the work done. And again, it just gives a true project for the employees, for the team, that they know they're building their own future on two set of competencies.
Okay.
That's where we're going.
Good. Jim, in terms of looking at challenges and risks going ahead, you still think that regulation, employment costs, and instability in emerging markets are big issues for Interstate?
Well, we see any time that we've got regulation that holds back economic growth, much like our first speaker, our economist today, talking about regulation. It's been a terrifically constraining environment for small business in the United States. That's really been difficult. Obamacare and all of the regulatory environment has really restrained business, and it's restrained growth, and it's restrained demand. I think greater challenges that we see now is the growth of the OTAs and disruption and all of the new channels that are emerging right now, higher cost channels, losing control of the customer, and seeing the brands really under fire through the OTAs is a real threat to our business today. And it's something that's not going away very quickly. And in fact, I think we're seeing generational change that is going to find our brand loyalty shifting potentially away from the major brands and into these OTAs. I think it's a very distressing development, and I think it's something that generationally will only get exacerbated.
Michael, do you share that concern about OTAs? I mean, obviously it's a cost to the business, but whether it'll ever go away. I think it's now indigenous in the way in which we run the business. Huh?
Yeah, no, I think every hotel company shares the same concerns, and I think what we're all grappling with now, on the one hand, you need the business, you welcome the business, but how can you be more efficient in driving bookings through your own channels? And I think that's what the hotel companies are now starting to get more sophisticated in driving that business, but it's going to be an ongoing battle.
I mean, presumably the higher up the chain you go in terms of luxury, the more you get recommended business or business that repeats itself. It's the lower end of the market that requires the bookings through the engines, and the engines are being monopolized now by other people other than hotel companies.
Well, and this is exactly, of course, the main pitch that the OTAs make. They say, look, fool on you if you can't convert that customer when they come back the second time to book directly with you. You obviously haven't engaged with them and built a relationship. So that, in theory, should be only a one-time booking, the first-time trial, and then you should be able to own that customer at that point.
Yeah. I would have thought in the resort business, though, that your ability to capture your customers and keep your customers is a little bit more assured. Huh?
Let's say it depends. For Club Med, clearly, I mean, 60% of our customers worldwide are coming direct, and it's growing. 20% are coming, of 100% are through our own internet sites. We are not selling to OTAs, and we decided not to do so, even though we were in a very difficult situation, because I have the chance of having the only brand for holidays in the world, with a very specific product, and we had for a long time a very strong marketing and sales organization. We have 15 internet sites in different languages, including Chinese, Russians, and Hebrew. We have 1,000 sales and marketing people around the world on 25 markets. So we are, in that respect, in a good situation, even though it's costly, and the point is to make sure that the cost of distribution is comparable to what you would get outside, which is hopefully the case, but it allows us to grow without this constraint.
Okay. And Accor and OTAs, what's your...
You know, my view, and I clearly don't want to be provocative, it's a great plus. It really is. It just, as I said to you, on a measurement of a risk, you just have to price that service.
Yeah.
But let's face it, let's not have any hesitation. Meta searches, OTAs, it's a great new innovation for the industry. It gives access, more visibility to the operator's brands that it would have done otherwise. It's just a new source of revenues. If you're big enough, which Accor is, then you can monitor. You close and you open the knobs to the OTA because you control a destination. So you don't depend on them. If you're an independent owner and operator, then clearly, if you're only going to be depending on them, then they may eat your lunch. But I am, you know, it's a very good wake-up call, and I'm going to be very candid and sincere with you, and I only started 6 months ago. It's a very old industry. 6 groups control more than 70% of the market. Intercontinental, Hyatt, Marriott, Starwood, Accor, Hilton, and no one has been acting for the last 11 years. We looked at Booking, Expedia coming, spectator. Did we do anything about it? No, we did not. Second wave, meta searchers, TripAdvisor, Trivago, Kayak, 5 years ago. Did we do anything about it? No. It's time to wake up.
All right.
Seriously.
Okay.
Because we're going to have a third wave. You're going to have a fourth wave. Let's be an actor. Let's be innovative. Let's create our own devices, digital. Let's go there. Place is wide open. Okay. Don't sleep.
Right, there we are. There's a wake-up call from a CEO of a hotel company. Now, you've all got growth plans. Everybody's got expansion as their headline. Just understand how you're going to fund that expansion. Let's start with Michael. You've got some good backing from your core investors, which is Saudi and
Qatari.
The Qatar
right.
money. Is that where the funding is coming from? Are you looking for external finance as well?
Well, our model, I think we've got, I'd say, 2 or 3 primary sources. Obviously, our shareholders, we've relied on to really help us get into key gateway cities with iconic assets. So with Prince Al Walid funding the Savoy in London, that gave us a terrific hotel for Fairmont. And with the Qataris buying the Royal Monceau, and that became a terrific Raffles in Paris. We enjoy being in France. And so I see them continuing to fund those really expensive, iconic properties.
So he's happy with the returns you're getting in both those properties, isn't it?
They both are. I mean, the interesting point about Raffles is that, often we're asked to, by many developers, particularly in the emerging nations, they say, what are your brands? And we want a Raffles. It's sort of like buying your best watch. And we say, well, it's not like buying watches. You have to have a market that can support that rate. In Paris, over 1,000 euros. If you can get that sort of rate, then you can afford to build this type of property. But I think most of the organic growth that we've seen over the last 5 years has actually been funded by third-party developers and owners. I mean, the good thing is, as we've built up in whether it's been Eastern Europe, Asia, Middle East, China, we've found enough developers, high net worth individuals, or SOEs in the case of China, that will build and fund these developments without us putting any equity in. So I see that continuing in terms of organic growth.
Excellent. Jim, you're doing M&A in Europe. Well, certainly you did some in the UK. You're going to continue to look for other opportunities in Europe?
It's been a big part of our growth. In the last 2.5 years, we've acquired 5 companies, 3 in the US, 2 in the UK. We continue to look for M&A activities in Europe, and that's our number one focus right now, to expand here. In our model, the independent management company model, the biggest risk we have is fragmentation that we really do have in the States, but we don't have in Europe in terms of having a pan-European presence and footprint that we have here with 85 hotels. So with that, we continue to look for small and mid-sized management companies. They're generally within a single country, and that helps us expand our network. So we generate a lot of internal cash flow, and we're able to reinvest that pretty efficiently in this segment right now. And it's a good market for us to be an acquirer of companies.
So these investors out there, you're not looking for their cash, you've got enough coming through your own.
Well, that's on the management side. Now, of course, on the ownership side, obviously we work with all the large owners, from public companies, pension funds, to wealthy individuals. So we've got a wide variety of ownership interests they're fueling our growth organically through signing and execution. So we've seen that continue to grow. Increasingly in Europe, it's been more institutional capital, and it's increasingly moving more to the independent operator. So we think the market's really coming to us right now.
Okay. Now, Sebastian, you've already indicated that Accor has the capacity to boost its property holdings, and you said it a little earlier, why should we leave the arena to Blackstone, Colony, and Starwood? Previously, you've been a strong proponent yourself of an asset-light strategy, and now we're seeing Accor move back into the real estate business.
Because I'm a contrarian.
Why a change of tactics? Do you like what's going on in property?
Well, seriously, did I change my mind? No. Did I recommend Accor to really go asset light and to divest of the real estate? Yes. Why? It's because 2 reasons. Number one, the financial market demands many of the hotel operators to go asset light because they have a better cash flow transformation, less volatility of their own results, and because the financial market probably believes that the hoteliers don't have any great appreciation of the cost of the capital. So they'd rather have that being done by somebody else who's more professional. Whether they're right or wrong, that's what they're saying. Then there's 2 options. You go in and you divest of real estate and you sell it, or you actually fix it. And you basically tell the market that they're not wrong, but you can extract the value yourself as opposed to let somebody else do it. I came on board. I've been, again, as a private equity guy, I've been doing it for 17 years, a lot of hotels investment. I am a believer that, I guess, had we sold all the assets quickly, it would have been a bad trade for Accor, because we don't even know what we're selling. We have a lot of fixed leases, variable leases, minimum guarantees, floor on the guarantees, who's paying the capex, what's off balance sheet. It's Chinese menu. It's a nightmare. So since you don't really know what you're selling, you're going to be basically in a bad position when selling it. Then you're going to have rep and warranties up to here. So whatever price you may get is not the right price. So I am a true believer that we can fix it. So we're going to do it internally. And we're going to hopefully prove the market that a hotel company has the abilities, if it's done transparently and differently, has the ability to conduct the two businesses under the same hat. I'm a true believer of this. Yeah. Again, I just cannot fight alone against the market. So I'm going to be a good listener, and another company belongs to its shareholders. Okay. So I've been coming from that route. Until then, I'm going to prove them out.
Are you going to sign any more leases?
Nope. This is one of the saying, no, seriously. If you need to put basically rules on the system, you have to define them and just stick to them. I.e., I've told the guys, until we know and we learn from our mistakes, let's not do any new leases, which is a big constraint. Certainly when it comes to Germany and the UK market, where a lot of development is done through leases. And there's nothing bad on leases. Let's be very correct. You have some very good leases, and Accor will renew some of the existing leases, and we will also deflag and not renew some of the leases. That has been said to my investors. They may not understand it or accept it, but we will do it. But until we figured out what we've done wrongly or rightly, let's not enter into new leases for the time being, period.
Just like to check, how many people in the audience have either an Accor investment or an Accor lease or an Accor agreement? Can we see a show of hands?
You can raise your hand, we can't see anything.
Okay. Henri, I presume if the bid goes through, there'll be quite a lot of money to invest. You've got you've got a Chinese company, Fosun, which is a massive conglomerate in China, and AXA Equity in France. And you'll have a bit of a stake in the company too, huh?
Yes. We are a different animal. What we own is the customers.
Yeah.
We have very loyal customers who are able to move from one place to another. So what we offer investors is simply to have a high rate of occupancy with a good ADR. Yeah. Our business is to create destinations. That's what Club Med has done in the last 64 years. Not always successfully and not always or not sufficiently profitably. But at least we have created from Bali to Cancun, from Agadir to Japan.
And judging by your tan from the Maldives as well, huh?
Yeah, and I was in the Maldives yesterday. There to add a second island for Club Med. Club Med was the first to be in the Maldives 30 years ago. So that's our business. Obviously, in that respect, for governments, institutional investors, local investors, we are the one which can help to create this destination value and ability to bring immediately customers. So our new projects, either in China or elsewhere, are done with mostly local investors. And then obviously we have very fine properties with recurring revenue. With those we are working with the classical, professional financial investors who say that is back with this kind of systems.
I mean, yes, I want to talk about brands now. A lot of people think that too many brands and they're all expressing the same values. Yesterday, Richard Solomon on this stage was talking more about the shift in branding. It started globalization, then it went localization, and now it's personalization. How do you really differentiate the brands that you have? I mean, Jim, you quoted all the brands that you actually have operating agreements with, and there are not only the main brands, the sub-brands. I mean, how do you differentiate to your customers all of these brands?
Yeah, we've been, in terms of our growth, we're somewhat brand agnostic. We find the right brands for our investors on the one hand, so it's one dimension that we have to look at. So the right brand for us is the one that kind of crosses the RevPAR maximization along with minimizing the CapEx expenditure to get the best ROI. So we've got two filters. That's the first filter, obviously, for our owners and investors. For our customers today, I've worked on the brand side. I've worked for Hilton, Hyatt, and IHG. So I've worked for a number of brands. And we are seeing now in our position, as you'd mentioned, Michael, a lot less differentiation than we had in the past. I think there has been a lot of homogenization across the brands. And I think Richard, I watched him yesterday too, and he's right. We need to get to that personalization of service. And we'd like to see the brands take greater emphasis on the customer, a little less emphasis in terms of all the work that they're spending to maximize the capital expenditures from the owners. I don't think it's in CapEx. Ultimately, it's going to be in service. And the brands that are doing the best in service right now and personalizing service, I think, are the ones that are going to succeed.
Yeah. But it seems to me that personalization is almost the end of brand standards, because if every customer gets something that's very personal to them, then you don't give them the bulk standard brand standard. I mean, you talk about brand diversity. You have 44 brands on your website. You exclaim brand diversity, and you talk about keeping brands flexible to optimize value. It's, I think there's a sort of a mismatch of definition there. Brands is usually standard guidelines, and the world seems to be moving towards this personalization. I mean, Michael, personalization, of course, in your sector is absolutely key.
Absolutely key, and I think, I think it's easier as you move up the luxury scale, because for Raffles, for example, it's defined by this smaller residential feel, butler service. I mean, it's a very distinct and, quite frankly, an expensive offering, both in terms of the real estate development on the service side, hence the need to have the kind of rates I talked about. Fairmont, because of its history in, again, these sort of iconic spaces, usually large hotels, there you have to have a much more efficient cost structure, and the trick there, obviously, is still trying to get that RevPAR premium in that space. And I think one of the things that's interesting about Fairmont, it did used to occupy a pretty distinct space, which we now see new movers coming into that space, so that's becoming more and more competitive. And then for the Swiss Hotel brand, that's obviously where most of our competition is, and differentiating that, I think fortunately we're helped by the fact that there's such a resonance with the Swiss identity that we can play off that. But it's a constant focus to try to make sure that we can differentiate, both in terms of the development side and also on the guest service side.
Right. Henri, you've only got the one brand to worry about. You must be in dreamland, huh?
That's at least a problem I don't have.
Yeah.
We have one brand.
Yeah.
I'm lucky that this brand, because it was, again, started a long time ago as the largest awareness for holidays. The point was to move its image, because the image was kind of mid-scale at a stage. So that has been a long marketing process, which is now mostly achieved. Hopefully in new countries for us, like China, that was not needed, because we started from the very beginning on an upscale positioning. The point is, having a brand is fine. You need then to get the product, and you need to get the selling system to it. I started my career as a CEO of Evian Water. What I mean by that, to make marketing with a product that you can't change, and which is by definition unique, oblige you to look at all the elements of the marketing mix. And the point is not so much what should be the brand, it's what should be the marketing mix of the brand. Okay. My brand, my product, my target group for us, affluent families and couples, and obviously my pricing.
Okay. Well, let's go on to innovation, and marketing is part of the innovation, marketing technology and general innovation. We heard from our economists this morning that innovation is going to be a key part of moving businesses forward in the next stage of business development. Sebastian, you've just appointed a deputy CEO from Orange, who's going to be in charge of many things, including digital innovation. What have you got up your sleeve there?
Well, the guy is great. So I don't know whether he's in the room or not, but I guess I know he's in Berlin. His name is Vivek Badrinath. He is Franco-Indian. He is super smart, but much more than this.
Does he have a cell phone? I mean,
yeah, he has everything. No, he's taking a risk with us on leaving the telecom industry, where he was probably one of the top leaders in exporting the experience of the stormy environment that he's been going through into the telecom industry. So could he import everything? No, but I'm sure the leisure industry has a lot to learn from what has been happening in the digital revolutions on the cell phone industry. And as much as I think I know finance pretty well, hotels pretty well, investors' expectations, I think I understand. When it comes to digital, CRM, smart pricing, loyalty programs, websites, friendly, not friendly, number of clicks, you need to be backed up. You need to basically import those who actually know better, get them basically at the highest level, at the COMEX level, at the executive committee level, and listen to what they have to say.
Right.
First, that guy's going to have to be a sponge like I was for the first 3 months, basically dive into the ecosystem, understand where we do well and what we don't do well. There's 2 things that needs to be done. One is roadmap. How much should you invest and what are the priorities in which you should invest? How to sequence those priorities. That is a 3-year work on make sure that I guess whenever you invest, which I've been learning from my past experience, what is defense investment, what is offense investment? What is it you need to invest to protect your network and your distribution software? What is it you need to invest to actually get accretive profit margin? That's one mission. There's another mission, which is very different, has to be done by the same guy. Do we need or don't we need to partner with someone? Should you partner with Google, Hotel Finder? Should you partner with Expedia, with Booking, with TripAdvisor, with Kayak, with all startup companies? Because one of us will basically be bold. You have to dare do something, make a bet. It might be the wrong bet, but make a bet on what is the future of tomorrow and how to basically reinvent it.
We shall look forward to seeing what Accor comes up with this new appointment. Jim, you're dependent upon the marketing innovations of your brands. Who's doing what out there which impresses you the most at the moment?
The greatest amount of our focus has been in the revenue management space right now. We think that, as an industry, we've really been behind the times, and this panel has certainly echoed that, and Sebastian said that there's more that we can do in this area, social media and all of that. So we've really been spending our time differentiating ourselves by our revenue management and our social media technology. How do you access and bring in more customers, access new customers, and access the whole emerging demographic of Gen X, Gen Y, and look at their pricing decisions. We think some of the brands are doing good work in this area. Marriott's shifted a lot of their focus into this Gen X, Gen Y component and what's driving demand in that new demographic. So our innovation is really focused on revenue management side of our business. We think that's really where the action is right now. We're not going to see enormous growth in demand. It's how do we extract more demand and gain more share. We're just not going to, where's that new demand coming from? We don't see it. We're going to have to get more out of what we have existing.
Okay. And Michael, innovation in the upscale area is a little bit more difficult to achieve. Many people prefer to have the more traditional environment working, but you're bringing your 3 brands a bit closer together in terms of how they're working?
Well, yeah, I'd first of all say that everyone's focused on mobile right now. I mean, that's sort of the huge interest. And even on the luxury end, what we're trying to do is to facilitate prospective customers being able to learn about the product. I mean, it's really interesting to see, even on either a luxury boutique hotel or a resort, where typically resorts, the customer wants to know so much about the experience that they're going to call the property. They're going to find out which way is the room facing and what are the amenities and everything. Now what we find is they spend a lot of time on the website. They're learning all of that on the website. The good news is that should cut down the transaction time, either when they book direct or through one of the booking channels or call. But facilitating that experience on our websites is where we're spending a lot of money right now to do that. The other thing I think on the technology side that we're all working through, and again it requires investment, is we know that the customer today brings their own content with them. So how do you now what they want to do is whether they've got their own iPad or whatever they've got in terms of a mobile device, they want to watch that content on the TV screen. How do you make that happen? What does that mean in terms of incredible bandwidth requirements in the hotels, getting to Sebastian's point about now how are we going to invest in that, who's going to invest in that? So I think all hotel companies are trying to evaluate where to spend this money and how to prioritize it.
Okay. We haven't had a call yet that your court case has been decided, so you're still CEO of the company. That's good. It's tough at the top. We want to find out, as a final question, what drives all of you guys on and keeps you motivated, apart from obviously your CEO salary and bonus. Jim, you're quite excited about developing the new generation of industry leaders. Is this a real passion for you moving forward?
Yeah, I think this is a tremendous time in our business. I think we wonder who are going to be sitting here 10 years from now, 20 years from now, and who the new CEOs are, and where will they be coming from. So I spent a lot of time speaking and talking to students and in colleges and universities. Yeah. And I think it's really exciting to see the change that's going through our business. And I think it's going to change dramatically. Right. And we're going to move away, much further away from kind of the bricks and mortar business into more of a service culture, and I think a much stronger technology culture in the future. And I think that's going to be an exciting new change in our business.
Well, you clearly recognizing the technology shift. You were an investor, Sebastian. You're now an operator. Is that driving you on? Is the thrill of being an operator as good as being an investor?
Well, that was not finance. So, I went in with lucid eyes. And the good news, I had to make a choice within 10 days. So I did not have much time to think about it, which was the middle of August. So I came in because I am absolutely convinced that Accor has it all. Absolutely, Accor controls its own destiny. So my vision has to be the team vision now. So I came in because I want to embark the people, make them very proud of what Accor is, and be the best hotel performer, the most valued hotel company. And we are today. The one thing that I guess, if I may share that with each of you, Accor is the biggest international hotel operator in the world. I'm insisting on operator, because most of our peers are much more franchisors than they are operators. We are, by a very wide margin. In Europe, we have a greater numbers of rooms than number 2, number 3, number 4 together. Same thing in Brazil. So let's move, let's shake Accor up. Right. Let's basically get this company even bigger. As long as you're transparent, you get your act together, and you're accountable for what you're doing. Okay. Be responsible. Well, so no hesitation.
We can see the enthusiasms there.
I have the energy, so we'll move.
Okay, Henri, a great brand being revitalized under your direction. Is this the thing that gives you the passion to move forward?
Yes, what is fascinating with this brand is that the idea of its founders was that our business is happiness. So it's a nice one to be in, and it's a nice mission to try to have your guests being simply happy for their holidays. Yeah. Secondly, what is good is that we have now a business model which can be the best for this very special business, which is upscale and holidays. And we have the ability to grow this company on an international scale. Right. Obviously, it takes time. Obviously, we are on the good way. And it's fantastic to do that with totally multicultural teams. In our resorts in the Maldives, where I was yesterday, our geo team is made of 27 nationalities who are working together to make their guests happy. Right. And this is obviously very, very interesting.
And Michael, the untapped growth potential, is that the thing that's moving you forward enthusiastically?
Absolutely. I mean, I think about the opportunity to be, if you look at different companies' growth curves over time, and you think about where we are, we're really at this inflection point where we're still small enough that you can actually really shape how these brands grow up. And yet you're not too small where it's going to be incremental. I mean, it's significant growth, and driving that is incredibly exciting.
Right, one final question, which only requires a yes or no answer. Given the average tenure of a CEO in the international lodging industry is 4 years, do you intend to be here at IHIF in 2018? Jim?
Absolutely.
Absolutely, right. Sebastian? Yes?
Yes.
Henri?
For sure.
Right, well, we'll reconvene in 2018. Looking forward to it. Thank you very much indeed. Thank you. Well done. Well done. Thanks a lot.